these changes a little bit longer. But of course, maybe it could increase the demise of the dollar, put extra pressure on the dollar. You don't know how it's going to pan out.
Exactly. Well, Nouriel Roubini was one of the few mainstream economists to correctly forecast the current economic disaster. He's now calling for at least an 18-month recession and another 20 to 30% decline in domestic home prices.
I think home prices are going to keep falling. And Roubini is one of the other mainstream economists that was forecasting what was going on. But one of the real ways I differ with Roubini is in favor of all the government thinks this stuff is going to work. And I think that's one of the reasons that he is now given more credibility. He's being brought to Washington. People are seeking out his advice. Nobody in Washington is seeking out my advice. And I think the difference between me and Roubini, even though I think I called many of the things that happened even more precisely than he did, at least as it applies to the economy, financial markets, housing market, I think the reason that Washington is seeking him out is because he's proposing solutions that they like. He's proposing more government. My solutions are less government. I blame the problems in the market on government. He blames the problems on capitalism. So I'm saying the government's the problem and more government is not the solution, and he's saying we need more government, we need old-fashioned Keynesian policies, and that's why he's being brought out to Washington, because the politicians like his prescription, even though, unfortunately, just because he understood that there were problems were coming, he doesn't know how to solve them. He still doesn't understand the root causes of these problems. And following his advice is just going to make the situation worse.
Yeah, Keynesian monetary expansion and all the rest of it. Right now, they're just pushing on a string. Peter, last Tuesday, the FDIC watch list of banks shot up by almost 50% to 171, and that's for the third quarter, indicating escalating troubles once again in the banking sector, largest list in 13 years. Now, 171 sounds like a lot, but that only comprises 2% of the 8,500 FDIC-insured banks. But many of the banks that weren't on the list have crashed, including Washington Mutual, IndyMac, Wachovia. They never made the FDIC watch list.
If the government hadn't been intervening to the extent that it has, if the Fed hadn't acquired, several trillion in assets already, many of the banks were already in bankruptcy. I mean, there would have been thousands of banks that failed had the government not been acting in the way that it has to prop up the real estate market and to prop up these bad debts. But that doesn't mean that these losses aren't there anymore. They are. They're just on the books of the Fed.
Yeah, there are losses now, right? The taxpayer.
In the diminished value of our dollar, and if you understand inflation, if you understand prices, your prices are going to go through the roof. But yeah, in one sense, the deflationists are correct in that if you want to measure prices in terms of gold bullion, the price of everything on this planet is going to come down in terms of gold. But if you want to measure prices in terms of dollars, Federal Reserve notes that they're running off the printing presses by the trillions, the price of everything eventually is going to go up. But the price of consumer goods is going to go up much faster than the price of capital goods, which means even if your stocks and your real estate start to go up, you're still going to be poorer.
Exactly. Well, it seemed like the Thanksgiving rally might have had legs, but, the Bears are now feasting on a post-holiday delicacy here. From its peak of October 9, 2007, the benchmark Dow Industrials is now 43%, and the S&P 500 has lost about half. With over $20 trillion of investor wealth up in smoke, the U.S. seems to be facing a depression here. Shouldn't most investors be waiting for the storm to pass on the sidelines?
I think that there is no real safety in cash, especially if the cash is the dollar. If they want to wait it out in gold, I don't have nearly as much of a problem. But I also think knowing, as an investor in value, when you look around the world at America's creditors, right, where the economies are fundamentally much sounder, but there is a financial crisis. And if you look around the world, people are making a big deal about the U.S. stock market being cheap. It's still expensive. If you compare it to the valuations in Asia right now and even in some parts of Europe and Australia, where stocks are trading at 1 and 2 and 3 times trailing earnings. Now, I understand that some of the earnings will be under pressure and they might not be as good, but ultimately those earnings can recover. And there are even stocks that are trading below the cash on their books right now in other countries. There are some real opportunities. And so it makes sense to try to buy when there's a lot of panic, when there's blood in the streets. It seems to me that this is not a time to be timid when it comes to investing. It's a time to be bold because that's how you get these good buys. But don't be confused and think that there's a big sale going on in the United States. our stocks are still expensive, despite the fact that they've come down, and I think they're going to go down a lot further because I think there's a much bigger earnings recession coming, and ultimately, all this inflation that we are unleashing is going to cause interest rates to rise, not fall. That will further undermine the market, further undermine our economy. So I think people need to keep their powder dry when it comes to the U.S., but I think they really want to be investing in these opportunities around the world, and they want to buy this pullback in commodities. Oil's not going to stay below $50 a barrel for long. And, I think next year it's going to be back above 100. I don't know, where it might go between now and then, but I think, commodity bull market is still intact. Look, there's no way to know in the short run what a price could be. I mean, who knew, during the dot-com mania, if someone tried to pick the top in Yahoo back then or Amazon or eBay, I mean, there was no way to know because there was no rationality. All you can do is guess. And I think that prices are declining. I don't think they represent a real price. I think it represents a price at this moment in time where you have massive liquidation and uncertainty. And so I don't know. I mean, I think the prices have already come down much more than they should have, and so you don't know how low they're going to go. But I do think, in the scheme of things, prices are going to go a lot higher, particularly in terms of U.S. dollars.
Very good. Well, my special guest today, Peter Schiff of Euro Pacific Capital. I'm sure that many listeners would like to visit your website, peruse your books and videos. Please tell them how they can do so.
They can go to my website at www.europac.net. You can buy both my books, Crash Proof and The Little Book of Bull Moves and Bear Markets, are both there. You can listen to my archive versions of my radio show that I've been archiving on that site for years. You can watch a lot of my television appearances, read a lot of my commentaries that I know are on your site, but they're also on my site as well, and I've been archiving them since I first started writing them. And, of course, my books are available in most bookstores, and if you go into a bookstore and they don't have my books, make sure and ask for them so they order them. And, of course, you can call my number or talk to one of my brokers if you're looking to have a brokerage account with us, try to take advantage of all these opportunities in Hong Kong and Singapore. The number to call is 800-727-7922. 800-727-7922.
Well, thank you, Peter, for taking time to discuss these important topics today, and continued success with your new best-selling book.
Thank you.